Hello all, welcome back to Invesfinc. On Friday, all the major Indian indices gave a breakout and closed near the key resistance levels. However, on weekend, we hear the news of major strikes on Iran by US and Israel, which could be defining the market movement on Monday. So in today's video, let's unlock the key support and resistance zones for Nifty, Sensex, Banknifty and FINNIFTY indices. We will also dive into the stocks that made headlines on Friday. So stick with us to the very end for our exclusive analysis on whether their momentum can continue and how you might approach them in Monday's trade. Before we jump onto the details, please go through the disclaimer. Now let's begin with the analysis on indices. First up, Nifty 50. So on Friday, we saw a green big candle on Nifty, and this overall candle constitutes around 1.29%. On Friday, we opened flat around 24,787 levels. However, from there we saw huge buying interest coming in, and this buying interest continued towards the highest level, though we had approached 25,136 levels in intraday. However, we just closed tad below those levels on Friday closing basis. So there was a jump of around 319 points in Friday's trading session, which now is considered as a positive breakout. However, yesterday or maybe today midnight, we saw a news coming in where there have been a war kind of scenario between Iran, Israel, and to this US has also joined. Now, on Monday's trading session, what can we expect? So since this is a severe uncertainty situation which has come across, now this is expected to escalate further in the oil prices, which is going to be negative for not just the Asian economies but also on the developed and growing economies like Europe and US. So we might see a kind of big impact over the overall inflation across the countries. Now from the trade perspective, so since we had closed on a higher level, now on Monday's trading session, if you see the Nifty starting to trade below the lows of 24,800 levels, then that would act as a significant negative for Monday's trading session. And if that selling off continues in Monday's intraday trading session and closes below the previous mark of 24,800 levels, then we might see a sharp downfall that is expected to continue throughout next week's trading session. So we might approach towards the previous support levels of around 24,500 from where we had given the positive trades on the higher side. So now for us, the immediate support is going to be the low of Friday, which is 24,800, and the immediate short-term support is going to be 24,500 levels. So below these levels, if we start trading, then it is a negative sentiment overall for the markets, and we might approach the new downtrends in the next week or by the end of this month. So the support for us is going to be around 25,000 levels, immediate support, and then the next strong support is going to be 24,800 levels, from where yesterday's Friday's trading session we saw significant buying interest, and then in the short term we would be seeing 24,500 as the immediate support. On the resistance, 25,100 level would act as a resistance for us. Now let's see on the open interest. So open interest surely summarizes that 25,000 is a crucial zone. So we see both call shortings from highs from all the call writers, and then also there is a huge support that is coming in from the put writers. So just alone on Friday, on the strikes of 24,800, 900 and 25,000, we see roughly around 30 to 50% of open interest additions that had happened. So these levels on the Monday's trade would act as a support. Only after the breakdown from 24,700 to 800 odd levels would be considered as a shorting opportunity for us. Till then, we should wait and see for the long positions what we have held on Friday. Now on the far away strikes, 26,000 remains the significant key resistance for us, from where it is expected to be difficult for Nifty to approach in given kind of war-like scenarios. So 26,000 would act as a strong resistance and a opportunity for all the shorters to take significant positions on shorts. For us, the immediate support would come at 24,500 levels, from where we had seen the buying interest coming in the last week's trading session. So as long as these levels are held, we can still think for positive opportunities in the coming trading sessions. On PCR, overall we are trading at 1.1, which is quite bullish. At the money, PCR is trading at 0.88, which is still positive. Now next is Sensex. So Sensex had also given a big breakout and has closed in a positive green candle, which is bullish engulfing for the previous trading session. So overall, Sensex opened on a flat note at 81,350 levels. From there, we saw a big jump and moved towards the highs of 82,500 levels. We just closed around 82,400 levels, which is quite positive, with a jump of 1,046 points, roughly translating to 1.3%. Now on Monday's trading session, if we start trading around 81,000 levels or start trading below those levels, then that should be considered as a negative trend and sentiment for Sensex. And once that happens, there are high probabilities that we might approach towards 80,200 levels in the next week itself. On the higher side, we have the resistance of 82,500, which we have been expecting Sensex to cross. If at all there would not have been any news of war, then this trade would have continued with a positive sentiment and crossed 82,500 levels. From there, we could have seen the next leg of up move coming in on Sensex. But now that this uncertain news had come in, we would again trade in the range bound kind of scenario between 80,200 levels to 82,500 in coming trading sessions. Let's see the open interest. From the open interest, it is very evident that at the lower levels of 81,500, we saw huge unwinding on the call side. So until 82,000 levels, we have been seeing that unwinding was seen on the call writing. So this suggests that all the put writers have significantly held their positions and in fact added the put writings until 82,500 levels. Now, as long as if we trade in this range of 81,500 to 82,500 levels, only then it should be considered as a kind of positive sentiment. If at all we start trading below 81,500, then that would act as a negative for Sensex, and we should cut all our long positions immediately. Now, if we talk from the perspective of PCR, it is 1.3, which is very bullish. At the money is at 0.93, which also suggests strong sentiment. Now next, moving to Banknifty. Banknifty also opened flat, and from there we saw huge buying interest coming in, and in fact we touched the highs of 56,328 levels, and we closed 1.22% on the higher side with 675 points jump. So overall, the Banknifty had closed on a positive note with a bullish engulfing that was seen. Now, as long as we sustain 55,500 levels on the lower side, till then we can consider it overall as a bullish sentiment. Once we start trading below 55,500 levels, then we might expect 55,000 levels to approach in the coming trading sessions. As well, if we start trading below those levels, then we could see a huge downfall that is expected to come in, which might also lead towards 54,000 levels in the end of the expiry, or maybe first July's expiry. So on the resistance side, 56,500 would act as a first resistance for us, and then if we cross beyond that, then we might approach 57,000 levels and 57,500 levels in the coming trading sessions. But with the kind of scenario what we have been seeing, it seems to be difficult. So let's see how the market reacts on Monday's trading session. On the open interest, so we still see the call writers have been holding significant positions at 56,000 levels, despite we crossed 56,250 levels in the trade. So for us, the immediate support is going to be 55,500 levels, and then 55,000 levels as a strong support. So as long as 55,000 levels is not broken on Bank Nifty, we can still consider this as a bullish sentiment and can continue holding the longs. On the higher side, 57,000 levels is where we are expecting Bank Nifty to move, but we have not been able to approach that from a very long time. So we have huge resistance even at 56,500 levels, which we can close only after decisively we trade for 2 to 3 trading sessions beyond 56,250 levels. So on PCR, we are at 0.9 overall, which is bullish, and at the money PCR is 0.84, which is again positive. Now lastly on FINNIFTY. So FINNIFTY had also given a huge breakout, and we have seen a bullish engulfing pattern. Overall, it opened at 26,294 levels, which was a flat opening, and the lows was just 2 points down below the opening, and from there we saw a sharp jump of around 400 points to the tune of 26,680 levels, and we, among all the indices, FINNIFTY closed quite positively with 1.33% high compared to the previous close. So there was a overall 350 points jump in FINNIFTY. So as you could see, there have been a significant green candle that was created, and we have closed at the significant resistance level. So now on Monday's trade, given the kind of news that we have heard, there are high probabilities that we would shave off whatever 350 points we had closed on a higher side on Friday's trading session. If at all that happens, then we might see a kind of negative sentiment to get created, and if we start trading below 26,200 levels, there are high probabilities that we might continue to see the further downfall expected to come in on FINNIFTY. And for us, 26,000 levels would act as a strong support. In those scenarios, if it gets broken out, then we might approach 25,500 levels also in the near term. So on the resistance side, it would act as 26,500 as the 26,800 as the immediate resistance, and if at all we cross above those levels, then 27,000 and 27,200 levels could be seen on FINNIFTY. Now let's see from the perspective of open interest. So open interest, we still see at the higher levels of around 27,000, 27,300 and 27,500 levels, the significant call writing has happened. We also see put writers still have been holding positions at 27,000 levels. So there have been good additions on the open interest at 26,600, 500, 600 and 700 levels on FINNIFTY. So as long as 26,500 mark is held, there is no significant downturn that can be expected. However, if we start trading below 26,000 levels, there are high probabilities that we might approach 26,300 and 26,000 levels in the next week's expiry. So overall, 26,000 remains crucial support for us, and 27,000 remains significant resistance on FINNIFTY. PCR seems to be strong at 0.9 overall and 0.75 at the money. So all the major indices had in fact closed on a positive note on Friday, but on Monday's trading session and next weekly expiry, since it is monthly expiry, we have to see how overall the indices are expected to trade with the negative news what we had seen over the weekend. Now let's see on the next segment on the market participants as to how they are trading. So FIIs on the index futures have been continuing to hold their short positions with 96,000 contracts. On index options, they have mildly cut short their short positions by 13,000 contracts, but still they have been holding negative 13,000 positions on index options. Proprietary traders, on the other hand, have turned bullish on index futures and went positive with 8,000 contracts longs on index futures. On index options, there have been huge positions on positive note that have been taken towards the long by proprietary traders. Overall, they are carrying 2.64 lakh longs in the index options, which is significant. And this major long positions have been taken in the intraday trading session, and that were continued. That is when we had seen a sharp jump in the indices on Friday's trading session. Now, clients or retailers, they have cut down their long positions on the index futures to the tune of 6,000 odd contracts, but still have been holding 57,755 contracts on index futures. On index options, despite the huge long positions from the proprietary traders and mildly by the FIIs, still clients or retailers have taken short positions to the tune of 2.35 lakh contracts, and these short positions have been in fact added on the Friday's trade alone. So not sure how come the retailers have been such confident despite the significant long positions that have been added by the smart or the institutional traders. Now let's see from the perspective of cash markets. So domestic institutional investors have in fact sold off positions in yesterday's or Friday's positive trend or positive trade by around 3,050 crores in the cash market. These had been severely absorbed by the FIIs to the tune of 7,941 crores. So now with the kind of negative sentiment that is expected, we might open gap down in Monday's trading session, and this would have a severe impact on the long positions held by FIIs in the cash market. So both the domestic institution investors as well as the retail traders seems to be on a winning side, probably if market opens gap down on Monday's trading session, and if that gap down sustains for at least 1 or 2 trading sessions. Now, last segment that we would be covering is the trending stocks on Friday's trading session. So the first up is PFC, Power Finance Corporation. So on Friday's trading session, we saw a sharp jump of 4.79% on PFC, and it closed at 409 levels. So the positive reaction or a rally that we saw in Friday's trade is a direct impact of the Reserve Bank of India's final or maybe new guidelines what it had been released for project financing. Now these new rules require lenders to set aside significantly less money as provisions for loans to under construction projects. For most infrastructure projects, the standard asset provisioning was set at 1% previously, and there was a substantial reduction, 5% previously, and there was a substantial reduction from 5 to 1% in the new guidelines. So that was proposed as a draft circular. Now this enhances the lending capacity and earnings potential of stocks like PFC. And that is when we saw a significant jump or a positive momentum in the stock. So PFC being a key financer for the India's power and energy infrastructure, and it deals with long-term loans for projects that are under construction for many long years. So this new circular has eased the norms, directly supporting its core business model and reducing its regulatory burden. So that is when we saw a kind of positive jump on the PFC, and this would ultimately be seen as huge profit or maybe a good stream of cash inflows in the balance sheet on PFC's overall, reports. So this is a quite positive news from RBI on the PFC stock. So in the coming days, you would see the stock gaining further and might approach the resistance levels of 440 in the coming days. So once we cross beyond 440 levels, only then we should start accumulating this stock for a further next leg of up move. On the support side, the support zone is at 380 to 390 levels. So if at all we start trading below these levels, then that should be considered as a negative sentiment for the stock, and we might see the further sharp downfall that is expected to come in. But with the Friday's huge volumes, it is expected that PFC stock might continue to trend on a higher side for at least short term basis. Now next stock for us is Siemens Limited, which saw a drop of around 2.15% on Friday's trading session. The most significant driver behind this negative sentiment was the exclusion of the newly listed Siemens Energy India stock from the MSCI Global Standards Index. Now, which is effective primarily from June 20th itself. So while Siemens Limited and Siemens Energy India are two separate entities, they are still closely linked in the minds of the investors, especially so soon after the demerger between Siemens and the Siemens Energy Limited. Now the significant selling pressure and the resulting drop of 5% in Siemens Energy India stock created a negative ripple effect on Siemens Limited stock as well, dragging it down by around 2% as Siemens is a parent company. Now, since index exclusion will have a sharp outflows in the liquidity from the Siemens Energy India Limited stock, so that would have impact overall on the sentiments on the Siemens Energy Limited stock. So that impact is also seen in the Siemens stock because it is ultimately a kind of parent company, and Siemens Energy Limited is a subsidiary for Siemens. So if there is an impact overall in the balance sheet of Siemens Energy India Limited, we might also see some negative effect coming in the Siemens stock. So overall, we have a strong support at around 3,180 to 200 levels in the Siemens stock. So if we see on Monday's trading session it closes below this, then we might see a sharp downfall continue to come in, and the stock might approach towards 3,800 level, 2,800 levels in the July month's expiry. So on the long side, we have the resistance at around 3,400 levels. So once we start trading above those levels, then that should be considered as a positive sentiment, and we might see the stock approaching towards 3,600 to 800 levels in the coming days. So that's it on the trending stocks from our side. So if today's analysis brought you value, don't forget to hit the like button and share it with your fellow traders. For all daily pre-market report updates, make sure to subscribe to our channel and tap the bell icon so that you never miss on any episode. You can also join our Twitter and Telegram channels. Links are given in the description. Thanks for watching, and we will see you in the next video. Happy Sunday.